All right, 5 on your money now. Some encouraging signs about inflation. It cooled to 2.8% last month. That's the first full month of President Trump's second term. It's less than analysts had expected. It did help Wall Street rally a bit today. The Dow finishing down, but slightly down 82 points. The S&P and the Nasdaq both finishing in the positive territory. This has been a rocky week for the major indices here. The S&P neared correction territory yesterday. The Nasdaq's already in correction territory.
Yeah, so we asked you to send us your questions about what this means for your money. Here to answer them is Chuck Zada with Armstrong Advisory Group. Chuck, thanks for joining us.
Absolutely. Great to be here today.
Yes, so many questions. So the first one comes from a viewer in their 60s, close to retirement, who says, I don't need a new car now, but probably will need one 2 to 4 years from now. Should I use my savings now to buy a new car to avoid tariffs, or should I wait?
Well, I think there are a lot of questions to potentially answer there. The first is, are you looking at a new car or are you looking at a used car? Because obviously those prices can move pretty differently. Second piece, do you have all of the savings needed in order to pay the full cash value of the car? Or do you need to borrow money? Because there still are very high interest rates on auto loans right now. You can be paying 5, 6, 7, 8% on new cars and north of 10% on used cars. So I think in terms of trying to buy something like a car, personally, I always try to defer it as long as possible because they're depreciating assets. But these are some of the questions that you can try to work through as you're trying to make that decision, because there are a lot of different permutations of what can happen there.
All right, another retirement-related question here. Mary in West Roxbury asks this. With the volatility of the market, I'm wondering if I should take my required disbursement now, or do I wait? So this obviously talking about, when you have a 401k, a retirement plan, you have to take a certain amount of money out every year, but you have some flexibility within the year of when you could do that. I know we can't predict the future, but that's a tough call, right?
Yeah, so once you get to age 73 is when you're required to start taking this money out. And the big thing is you have all the way up until year end to be able to do so. If you're not sure what the market's going to do, which, if we're being honest, none of us are sure what the market's going to do, you can simply say, look, maybe I take a chunk of it out each month and I spread the risk that way. Because ultimately, if you take it all right now, you're saying, hey, I definitely know this is going to get worse. If you take it all at the end of the year, you're saying, well, I'm hoping it doesn't get worse before then. By spreading it out and taking a little bit each month, you can kind of manage that risk and say, I don't know what it's going to do, but I can pull a little bit out each month in order to satisfy that required distribution.
Got it. Okay, and this one from Walter and Jeanette, who simply asks, should I put my money into a mutual fund now?
So big thing, mutual funds, there are all different kinds out there. There are ones for stocks, U.S., international, big companies, small companies. There are ones for bonds, corporate bonds, municipal bonds, United States government bonds. They're all different. And without looking at your specific situation and saying, hey, what are you trying to do? What are your financial goals? And what are you trying to accomplish with your money? It's impossible to say whether or not this is a good, bad, or ugly time to be putting money into a mutual fund. So it's something where you just have to understand there's so many different options there. But certainly there are people that can help you to work through those decisions and those questions, because it is a very complex issue.
Don't do anything panicky.
I think the big thing is, look, the market, this is a feature, what we're seeing in markets. They can be volatile. It does happen from time to time, but it is a normal functioning market.
All right, Chuck Zada with Armstrong. Thanks so much, Chuck. Good to see you.
Thank you, Chuck.